Hey, what's up, my new Standard Nation? We're coming at you today with an episode about the real estate market and what do you need to qualify to buy a house. And more in the sense of we're going to talk about down payment. So when you look at the real estate market overall right now, we actually did see a downtick in interest rates, which is crazy, but everyone is talking about, all the experts, so-called, that they're going to keep rising. Now, I know they keep saying that, and they did rise a little bit, but it is projected by the end of the year to be close to 5%. We're hovering around 4.5% right now, which is pretty sweet considering a few months ago we were above 5%. But really what I want to talk to you guys about today is what kind of money do you need for a down payment? And it really comes down to what your specific situation is. So we have to take into account what your credit score is, what kind of income you have coming in now, what your past is. They're going to look at, they call them trade lines or credit lines. So how many trade lines or credit lines have you had? How long have you had those? All of that kind of stuff. I always call it the global picture. I'm not sure what lenders necessarily call it, but they want to take this whole picture and see how financially strong you are to buy a house. So we've had people that you can buy a house with no money down, and we've had people that have a 500 credit score and they put 50% down and they just showed that they had something bad happen to them in the past. And then what happened is they came out of that, but their credit score still hurt, but they are showing or have a decent income. So the bank or lender is allowed, or not allowed, but is willing to give them a loan because they're able to show that they're going to be able to make those payments on that. So really it depends on your specific situation. So I would say you can reach out to us, kind of talk to us a little bit. You can talk to a local lender. But as far as a down payment on a house, you can buy a house for really no money down, depending on where you are and the type of loan programs they have. You have other programs that are 3.5% down. If you're looking at a traditional standard mortgage, you can get away with 5% down. That's called a conventional mortgage. On top of that, the thing you really have to understand is if you don't have 20% down, you're going to have to pay PMI or MI, it's called, so it's primary mortgage insurance or mortgage insurance. And again, it depends on the type of loan, so I don't want to give this broad stroke, but that is generally what happens. But for example, a VA loan, there's times where you don't have to pay mortgage insurance. So it really depends on the type of situation you're in, what your credit score is, what kind of income you have coming in. But you can buy a house for no money down, or if you have a terrible credit score, but you have a ton of income and a bunch of money to put down, there's probably a program out there for you. So I would say reach out to us today. Let us help educate you on what's going on in your local market, and then we can look and decide what is the best loan program for you and your family. Because the fact of the matter is, at the end of the day, you can go into any mortgage office or bank, and they might say, hey, here's a program you can go in. But really, they need to sit down and educate you on the wide array, or maybe there's not a wide array, of potential opportunities or programs for you, and really understand your situation. Are you, a first-time home buyer? Are you going to stay there 5 years? Is it a forever home? You have to look at all of these things to put you and your family in the best position possible. So I hope you enjoyed today's episode. Don't forget to raise your standard, and we'll talk to you soon.